Hello dear traders, this is Petko Alexandrov, and while I am waiting the expert advisors to show some results, to have some statistics, I will record 3 lectures where I will show how exactly these 10 strategies could be traded, what are the parameters inside, and what are the entry and the exit rules. This way, if you want to trade them manually, you will know how to do it. And if you are not a fan of manual trading and you want to use only the expert advisors, you can basically skip these 3 lectures and continue with the results from the expert advisors. But if you just want to know how the trades are opened, where exactly the trades are open, what rules are behind these expert advisors, you can go ahead with these 3 videos. Okay, now I will use the Expert Advisor Studio because we have a very nice indicator chart and we can see exactly where the trades were open and closed. And on the home page you can see that there is a video of mine, and below the useful links there is new series of videos that I recorded recently and just uploaded them today, and they are free and you can have a look at them if you want to learn how Expert Advisor Studio works. It's actually a complete startup course, and I show all the instruments, I go through them, and I show some example trading as well. So if you are interested to learn more about the Expert Advisor Studio, you can watch these free videos. Now I will go to strategy and I will import back the first expert advisor. This is the one ending on 559. I will click on open and you can see what I have. I have one entry rule, the RVI signal, and we have the RVI line crosses the signal line downward. Okay, this is the rule to buy for the long entry. And to exit the long trade or to exit the buy positions, we have volumes. Volume crosses the level line upward. This is the exit condition. Okay, so for the RVI we have period of 46, and for volumes we have level of 11,912. So these are the parameters for the initial expert advisors. Now of course with the time I will be updating these strategies, okay, because the market changes. I will do some optimization, I will do some analysis according to the recent market conditions, and I will change these parameters. Whenever I do a change, I will let you know, and basically I will replace these strategies with the new ones, with the new parameters. And one of the ways to see the new parameters is if you open the strategy in the meta editor, you can see at the beginning of each strategy we have exactly the stop loss, the take profit, we have as well the indicator parameters. So you can see here is for the RVI signal 48, the volumes, so you can see the new parameters inside the code of the strategies. Alright, so let's see the indicator chart of the first strategy, how it looks. We have the RVI line crosses the signal line downward. This is our entry rule, and we have volumes as an exit rule. Okay, I click on the strategy and you see here with the Expert Advisor Studio we have a very nice indicator chart. We see exactly where the trades were open and closed, and right here we have a long trade, because the RVI crosses the signal line downwards, and on the opening of the next bar the trade is open. Okay, so when we have the event happening, in this case the event is the RVI line crossing the signal line downwards, on the opening of the next one the trade is opened. And with the expert advisors, the take profit and the stop loss are placed immediately. But if you do that manually, you need to place the indicators, you need to wait to see the cross, and on the opening of the next bar you need to be ready to open the trade. After that you need to place the take profit and the stop loss. In this case the take profit is 788 pips and take profit of 664 pips, which is $7.88 and $6.64. Alright, let me go back to the chart. So once you are into the trade, place your take profit, place your stop loss, and keep watching the exit rule as well, because if it reaches above 11,912, you need to close the position. In this case, you can see that the take profit was hit. Okay, so it doesn't really matter which platform you will be using. For manual trading, you can use any platform. There are many web-based platforms. I personally prefer MetaTrader because it is possible to trade with the expert advisors, but for manual trading, you can really use any platform. Okay, so you can see here are consecutive profitable trades. Here is a buy after the RVI line crosses the signal line downwards. Another buy over here, and then another one over here. Let's have a look at some short trade. Okay, this one over here, you can see it happened after the RVI crossed the signal line upwards, okay, the opposite direction. But in this case, the trade was closed because of the stop loss. Alright, so this is how the first strategy works. 2 indicators, stop loss and a take profit. You can see it has a very nice balanced chart so far. Okay, I will remove this strategy from the collection and I will upload the next one. It will be the one with magic number ending on 184. I click on open. What we have here is the directional indicators and envelopes as an exit condition. We have stop loss of 832 and 945. Directional indicators, we have the DI positive line crosses the DI negative line downwards with period of 44. Okay, and with the envelopes, I have the bar opens above lower band after opening below it. Okay, so it means that we will exit the long trade once the price was below the envelopes, and when it gets into the envelopes, we are out. Period of 20 deviation 0.36. All right. So these are the 2 indicators with this strategy. What you need to place on the chart if you want to trade it manually is the directional indicators, which display below the chart, and the envelopes, it is over the price chart. Alright, so we have the positive DI crosses the negative DI downwards. You can see the green line, the positive one, crosses the red line downwards, so we need to buy. On the opening of the next bar, the trade is opened, and you can see in this case it goes to the take profit. Okay, so once you see the cross of the 2 lines, you need to open your trade, you need to place your take profit and your stop loss, and you need to look for exit from the exit rule, which is the envelopes. Let's have a look at some example where the trade was closed due to the envelopes. I will go back and look for such example. So the entry here is very clear when the 2 lines crosses. Now in this example, we have the opposite case. We have a short trade because the positive line crosses the negative line upwards. Okay, so we are selling. Let's see what happens with this trade. It closes over here and it closes because of the envelope. Okay, we said for a long trade we want to see that the bar opens above the lower band after opening below it. So for the short trade it will be the opposite thing. The bar will open below upper band after opening above it. Alright, so we want to see the price going above the band, and when it gets into the envelopes between the 2 bands, it closes the trade on the first bar open. Okay, this is why we say that we will exit the short trade when the bar opens below upper band after opening above it. This bar opens above, on the opening of next one we are out. Okay, this is how the envelopes work in this strategy. I will click on the editor one more time so you can view the strategy. One entry rule, period of 44, one exit rule, period of 20, deviation 0.36. Okay, we have the stop loss and the take profit. I will remove this strategy and I will import back the third expert advisor ending on 637. I click on open and you will see that here we have two indicators as an entry rules and we have one exit. The first one is the CCI and it says CCI crosses the level line downward, period of 23, and it applies to typical method. And let's have a look at the average true range. We want the ATR to be falling, okay, period of 21, level of 0.01. And the envelopes is our exit indicator again. The bar opens below upper band after opening above it. So in this case it is different. The bar opens below upper band after opening above it. This is for the long trade now. We need to see that the price gets into the bands in order to exit the long trade. And here we have period of 27, deviation of 0.39. All right, let me have a look at the indicator chart. We said that we want to have the CCI crossing the level line downwards in order to buy, and it will be upwards in order to sell. Okay, you can see here the CCI crosses the level line upward. Let's have a look one more time at the level. Yes, it is the zero line. You can see that it is displayed over here. So when it crosses upwards, we sell, and when it crosses downwards, we buy. So you can see here is a sell and here is a buy. And as a confirmation, we have average true range false. This is for the long trades, and for the short trades it should be rising. So at this moment over here it is rising at the opening of this bar. I'm not sure if you can see it, but here there is a small move down, then it's going a little bit up and then goes down again. And many traders actually make the mistake to look over the chart over the trading platforms to analyze strategies with indicators, but the thing is that they repaint and they are very misleading when you look at them back in time. Sometimes it is very clear where the entry is, but sometimes the indicator at this moment was not exactly what we see it right now. Okay, so here we have a long trade. You can see that we have the cross of the CCI of the level line is going down, it's crossing downwards the line. This is why on the opening of the next one we have the long trade. So right here was the cross. On the opening of the next bar, the trade is executed, and at the same time we need to have the average true range false. Okay, it's falling at this moment right over here. And what happened with this trade? It hit the take profit, and you can see where is the stop loss. So this line, the red line, shows where the stop loss is, and this one over here shows where the take profit is. And you can see there is a small arrow where the trade was open. It is green if it was a buy position, and if it was a sell position, it is red. Okay, so these are the first three strategies that I selected and that I placed for algorithmic trading, but I want to show how these strategies actually work, and if someone is interested in manual trading, they can use them as well in manual trading. And as I've said, I will update these strategies whenever it is needed according to the recent market conditions. I will do some optimization. I will analyze them according to the new data that comes, the new bars, the new historical data. So what I'm going to do in these three lectures where I show the manual trading of the strategies, I will attach PDF files as resources, and I will describe the strategies there with the parameters and exactly the rules that are followed. So if you want to trade these strategies manually, it will be easier for you. And the other thing is that when I update these strategies, I will update these resource files and I will put there the new parameters. So if any of the parameters is changed, I will underline it. Okay, so for example, if I change the CCI to 25 but no longer 23, I will just underline the 25 so you know this is a new value and you can start using the new value. And as well, I will update the expert advisors with the new parameters. So I will upload the new expert advisors with the new parameters. And the other way that I told you to see the new parameters is from the code of the expert advisor, but I believe with the resources files that you will find attached to this lecture and the next 2 lectures, it will be much easier for you. Alright, thanks for watching and I will see you straight away in the next lecture. Cheers!